But they rigged the election on you. Mine was too big to rig. You won. I'm telling you, you won. But you're going to do great this time. He's a great guy, actually. He's going to be an amazing senator. Thank you. Thank you for being here, gentlemen. Special envoy to Iraq, Mark Savaya. Mark. Hi, Mark. Thank you. Great job you've done. This guy, he negotiates better than anybody around. Thank you. You need it. With Iraq, you need it. You need to be a good negotiator, Mark. I also want to thank Michigan's great congressional delegation. They're amazing. That's been back in Washington due to a very important vote that's coming up. They had a choice. Sir, we want to be with you, but if we're not with you, we're going to lose. But we'll still be with you. I said, no, I'd rather have you win. Don't worry about it. So we're going to win the vote. Representatives Lisa McClain, Jack Bergman, John Molinar, Bill Heisinger, Tim Walberg, John James, and Tom Barrett. They're great people, every one of them. And as many of you remember, I came here at the height of the 2024 campaign to lay out my plan to bring jobs and factories and wealth racing back to the United States and coming back to the great state of Michigan. And just a few weeks later, the people of this state and the voters all across the country endorsed that vision in a landslide victory. We won everything. We won all 7 swing states. We won the Electoral College 312 to 226. We won the popular vote by millions and millions of... Oh, it's so nice to win the popular vote. I won the popular vote all 3 times, too, but we're not going to get into that. But the first time they said I didn't win the popular vote, but I won the Electoral College. So they always said, while he didn't win, this is the way I got introduced every time. While he didn't win the popular vote, he won the Electoral College, you know. So this is the way I was introduced for 4 years. And guess what? We said, I'm going back, we're going to win and we won the popular vote by a lot. So they can't say that crap anymore. And the thing that was most impressive, we won 86% of all counties in America, 2,700 to 525. Think of that, 2,700 to 525. And that's why when you look at the maps on Republican, Democrat, with red being Republican, as most of you know by now, I think, every once in a while you see one where they have it reversed. I said, why would we do that? Well, we think it looks better. I said, look, red is Republican. Let's not try and change the voters' minds on things. Just do it that way. And the map was virtually all right. That was about the counties. That was the 2,700 to 550, I think is the exact number. Most importantly, we won a historic mandate to make America great again. And that's what we're doing. We're making America great again like never before. And now, after less than 12 months in office, this is the easiest speech to make. I have great people, and all I'm doing is spewing off what the hell we've done. Even Venezuela wasn't too bad, was it, huh? But you have people, Democrats, they say, I don't know if we should have done Venezuela. I don't know. Anybody that says that hates our country, okay? That was as flawless an attack as there has ever been. And they asked us to help them. They have 50 million barrels of oil. They said, take it. It's $5 billion. And we did. We're working with the Venezuelan people and representatives, and it's amazing. But that was an amazing situation. But we did al-Baghdadi, flawless. We did Soleimani, flawless. We did the Iran nuclear attack where we wiped out their nuclear capacity, which would have been very bad. You wouldn't have peace in the Middle East, flawless. We did them all flawless. I want to keep it going that way, too. I like flawless. Think about Jimmy Carter, the great Jimmy Carter, with the helicopters crashing, the hostages all over the place. Remember that one? Think about Sleepy Joe Biden with Afghanistan. What a disaster. The most embarrassing day in the history of our country, in my opinion. Real dope. Now, after less than 12 months in office, I'm back in Michigan to report to you on the strongest and fastest economic turnaround in our country's history. It's really been historic. There's never been, we're not 12 months, we're through 11 months. We've got $18 trillion being invested in our country. The most of any country ever was 3. We're at 18. There's never been anything like this. You are so lucky I allow you into this room to even be with me. I'm kidding. I'm kidding. The fake news will say Donald Trump thinks he's hot stuff. Right now I'm feeling pretty good, though, I will say. Oh, you're so lucky to be here. Under our administration, growth is exploding, productivity is soaring, investment is booming, incomes are rising, inflation is defeated, America is respected again like never before, and other than that, we're not doing that well. Now, think of all those things I just said. Every single inflation down, growth at an all-time high, stock market every day, 48 days in a row, 48 days during the course of 11 months, we hit a new high on the stock market, all of them. 1 year ago, we were a dead country. Now we are the hottest country anywhere in the world. That was said to me by many leaders. By almost every metric, we have quickly gone from the worst numbers on record to the best and strongest numbers, the most dynamic numbers, and an economy that is far ahead of even my optimistic. I had a very optimistic schedule, I thought. I didn't think it was, but people said it was very optimistic. Turns out to be very pessimistic by compared to what we've done. But we'll go down as the greatest in history, greatest first year in history nobody's ever had, just based on the numbers, based only on the numbers, not based on me, based only on the numbers. Because, you know, you get these guys like the governor of California likes to say how well he's doing. California's doing horrendously, but he says how well. We base it on numbers. There's never been numbers like this. Through 4 long years before I took office, crooked Joe Biden and his allies in Congress inflicted the economic nightmare known as stagflation. How many times have you heard the word? We hit it with Joe. We hit everything. What a disaster. Meaning low growth and high inflation. How does that work? Not good. So you have lousy growth and high inflation. In fact, it's the lowest growth ever and the worst inflation in the history of our country. That is really tantamount to not having a good 4 years, right? In other words, Sleepy Joe and the people that ran the auto pen were a complete and total disaster for our nation. They were a disaster for our nation. Had they won the election less than 1 year ago, we would have been, as I've often said, Venezuela on steroids. Now I'm Venezuela's biggest fan. We're working with them, but they came down from a very high number to a disaster, a disaster. And we would have been Venezuela on steroids, and we're bringing Venezuela back, and we're going to be great for Venezuela, great for our country. We're taking in, as I said, millions and millions of barrels of oil. And now they're coming in initially on a daily basis, 50 million, and values of over $5 billion. That's in 1 day. Just think of it. The biggest ships in the world can take 1 million barrels. The biggest ships in the world take 1 million. We have 50 million barrels. We need 50 of the biggest ships in the world just to get it out. We're bringing it in to be refined. It's an incredible feeling. It's great. Winning is a good thing. We're going to work with Venezuela. We'll make that country very strong again. We'll get oil prices down even further. We have it down at about a 6-year low, 7-year low, but we're going to get it down further. Joe Biden gave us a colossal stagflation catastrophe, but my administration's rapidly and very decisively ended that. We have quickly achieved the exact opposite of stagflation. Almost no inflation and super high growth. So we have the highest growth we've ever had. Think of that. The highest growth we've ever had, and we've only been there 11 months. Think of what we can do for the rest of it. But do we have wood around here? I want to knock on a little wood. They have one little, everything's plastic nowadays. It's very tough. Now we have the greatest growth, and we have, inflation way, way down. But we inherited terrible growth, and we inherited the worst inflation in the history of our country. The fake news would say 49 years. So when I say the history, they give me a lot of time, but I believe it's the history. But let's say 49 years. Would you say 49 years is okay, right? It's pretty bad. What do you think, Mr. Senator, Mr. Future Senator? I'd say 49. What sounds worse, 49 years or history? I think 49 years almost sounds worse. Maybe I'll just use it and I won't argue with these people. As of this morning, core inflation for the past 3 months has been just 1.6%. The numbers were just announced just before I came on stage. And GDP is smashing expectations with the fastest growth for this country in many years. The fourth quarter is projected at 5.4%, And that's despite the Democrat shutdown, where we lost at least 1.5 points. You know, the Democrat shutdown, we would have had close to 7. Think of that, close to 7. They were projecting to. The fakers were projecting to. And if we keep deregulating and adding more capacity, like I saw today at Ford, and if we don't raise interest rates every time good news is mentioned. You know, in the old days, I'm probably old. I used to be up at these lecterns and I'd say, I'm younger than pretty much everybody in the room. Now I say I'm older than pretty much everybody in the room. I like it the other way better, actually. But you're too young. But in the old days, when you had good numbers, interest rates would go down. When you had good numbers, the market would go through the roof. That's the way we're going to make it again. That's the old-fashioned way. That's the right way. Today, if you announce great numbers, they raise interest rates to try and kill it. So you can never really have the kind of rally you should have. What happens and what we want, we're going to have a lot of great months, a lot of great quarters. I want the market to go up. You announce unbelievable numbers and the market goes down because they know you're going to do everything possible. In the Fed, we have a real stiff in the Fed, but that's for another day. But they raise rates. So everyone says, oh, they announced great numbers. It's great, great, great. And the market goes down because they immediately raise rates. No, when the market goes up, they should lower rates. You want to see 20% and 25%? You want to see what we can do? We've got to go back to an old standard. When there's good news, the market should go up, not go down. Does that make sense to everybody? And that's the way it used to be for most of the time. That's the way you make a country great. But our growth potential is unlimited and could be much higher if we went back to sanity. We're not doing it anymore. We're talking about the head of the Fed, and I want somebody that when the market is doing great, interest rates can go down because our country becomes stronger. See, you view it differently. Our country becomes stronger, and therefore interest rates should go down, not up. They kill every rally. If it's, no matter who, it's beyond me as president, it's no matter who's president. You have a good quarter, and they want to kill it because they're so petrified of inflation. And growth and inflation don't necessarily go hand in hand. You can have growth and very low inflation. In fact, oftentimes growth is good for low inflation. So we're going to work on that, Scott, right? I think we're going to work on that very hard. I mean it so strongly. It's sickening. We announce good numbers, and we see the stock market drops 300 points. I say, what the hell is going on? Do you agree with me? It should be just the opposite. All right, Scott agrees, so I'm very happy about this. That means if he didn't agree, I wouldn't do it. But we're already growing double, triple, and even quadruple the speed of almost every other major economy on Earth. We're the #1 economy on Earth, too. And the results are in, and the Trump economic boom is officially begun. It's really begun almost from the beginning. It almost begun, if you look at it, really from November 5th. You know, on another metric, just before the election, it was almost impossible to get people to join the military. We had the worst enlistment in the history of our country, the worst. You couldn't get people for the Army, the Navy, the Air Force, the Marines, Space Force, the Coast Guard. You couldn't get people. And since right after the election, but especially since after January 20th, when we took office, we have now the strongest enlistment we've ever had in the history of our country. We've never enlisted people so quickly, so easily. And we enlist by merit now. You know, we won a Supreme Court case that said you hire by merit. You go to college now by merit. Everything's by merit. Our country became great because of merit. And we have done some job. But think of it, a year and a half ago, we had the worst enlistment in history, and now we have the best enlistment. Things like that don't happen. You might go from the bad enlistment to okay, but you don't go from the worst in history to the best in history. But that's what we've done, every one of them. And that includes police and firefighters. It was very hard to get police. It was very hard to get firefighters, and now everybody wants those jobs. In 4 years of Biden, they secured less than $1 trillion of new investment in the United States. So 4 years, less than $1 trillion. In less than 1 year, I have secured commitments for over $18 trillion from all over the world, the most ever for any country. Think of that, though. They did, and I'll tell you what, had she won, it would be a disaster. because you were having people leave. You would have not had 1 trillion. You would have had 5 trillion, 10 trillion leaving the country, and your welfare would have doubled. When you look at what's going on in Minnesota, is that a disgrace? Is that a disgrace? But we'll talk about that. Under Biden, we had the highest trade deficit ever recorded, losing more than $1 trillion every single year. How about that? It was killing Michigan, and everywhere else in our country was being absolutely destroyed. But in a matter of months, largely because of tariff income and the election result, we've slashed that gaping trade deficit by, in a short period of time, 62, it just came out, 62%. People are stunned. The fake news back there, look at those cameras rocking and rolling. No, the fake news back there is, they're very upset about it, actually, but they're stunned. They can't believe it. We cut our trade deficit in actually 10 months was when the number came out. We cut it by 62%. It's going to go better than that now. The stock market is now the highest in history since the election. We've set all of those records, and I think an all-time record that's so important to me because so many people have them is boosting 401ks and retirement accounts for millions and millions of Americans, people that are in the police departments, the fire departments, people that are construction workers. A policeman came up to me recently, a nice guy guarding me. He's a perfect guy to guard me. He was a massive guy, big, strong guy. He said, "Sir, you made me look so good in front of my wife. My wife thought I was a horrible investor because every time I invested, we lost money. And we have a 401k, and I'm up like 85%. She thinks I'm Warren Buffett. She thinks I'm brilliant. She's now calling me brilliant. It makes my life much easier. I love my wife much more now. She calls me brilliant every time." I said, "Don't worry, you're going to do even better for the next 3 years." But one of the biggest reasons for this unbelievable success has been our historic use of tariffs. There was the tariff that made America strong and powerful in past generations, and then we got off it and we went to the income tax system. Great going, fellas. You know, we were the strongest in 1887, relatively speaking. That was around the McKinley time, and Teddy Roosevelt and some others, but we were really strong. It was all tariffs. And I know what happened. Some of these countries got together and they say, hey, convince the United States that it's no good, the tariff system is unfair to us. And so some genius, I know who, I don't want to get into it, but some genius said, oh, let's go to an income tax system. So instead of foreign companies and countries paying everything, the people started paying. And then after that, you had a depression, but that was a long time. That was in like 1913, you had the tariff switched into income tax. And then and they like to blame tariffs. You ever notice they blame tariffs? No, they brought tariffs back in 1932. They brought them back to try and save the sucker. But it was in 1929, because a lot of people, you know, the anti-tariff people. Now, an anti-tariff person is a pro-Chinese person, like Coke. This guy's fought me in every election I've ever been in, and I've kicked his ass. He inherited a lot of money, and I don't know the gentleman. But he fights me, and then he goes out and says, I made more money with Trump than I ever made in my life. And then he supports these other people that were total losers, gives them a lot of money. But he made more money. Everybody makes money with me. I always made money for people. And now it's tariffs that are making money for Michigan, and the entire country is stronger and safer and richer than ever before outside of that period of time. Now, if they had what was called the Great Tariff Act of 1887 or something like that, and it was a great group of people like yourselves. They picked really smart people to sit on a committee. They had so much money, they didn't know what to do with it, and they wanted to have the money given away. You know, we built the Panama Canal out of tariffs. We did a lot of things. Panama Canal was the single biggest investment, relatively speaking, that this country's ever made. Would be the equivalent of trillions of dollars today. And Jimmy Carter gave it away for $1. It was also the most profitable thing ever built. In other words, like buildings or casinos or anything, the most profitable thing ever built was the Panama Canal. And brilliantly, Jimmy Carter thought the country of Panama should have it, even though we lost 36,000 people to the mosquito. You know that, right? To the mosquito and a certain snake, which was not a very nice reptile. This was a brutal reptile. You got bit, it was over. It was just like, bye-bye, everybody. We lost 36,000 people. Malaria, the mosquito, and the snake. And he gave it away for $1. Well, at least we got $1. That's better than most of those guys do. We got $1 for that. Most expensive thing ever built, most profitable thing ever built, too. Makes so much money. Every prediction the critics made about our tariff policy has failed to materialize. The evidence shows overwhelmingly that the tariffs are not paid by American consumers, that they're paid by foreign nations and middlemen. And Scott went over that with us before, and they're paid by middlemen. They raise the thing. Countries get involved. They pay them because otherwise they won't have companies. They won't be viable. And we're the big beneficiary. Once again, the so-called experts were 100% wrong, and Trump was right. People of Michigan were 100% right. You elected the right guy. If you had the other person, everybody, we wouldn't even be having a meeting today, probably. There'd be no meeting. The Economic Club would be saying, like, man, we're doing bad. This is going to be awfully tough to get people to show up. This is going to be tough, the chairman. This is going to not be a good day for us. We don't want to have, let's cancel the meeting immediately. The Trump tariffs have delivered us trillions of dollars of new investment, unprecedented new partnerships on minerals, rare earths, defense, and artificial intelligence, and historic levels of foreign military sales. You know, you have the Supreme Court now going to rule on whether or not we can use tariffs. Can you believe this? A case brought about by people that are China-centric. Foreign-centric, but China-centric. I wouldn't want it if I was China either. You know, China's one of our biggest taxpayers right now. China. Would you ever believe you'd hear that? And they've been great. My relationship with President Xi has been great. But we have a group that's foreign-centric, China-centric, suing, and we'll figure something out if we don't win. But we should win. I mean, we should win. So great for national security. I ended 8 wars. Think of that. 8 wars. And without trade and tariffs, you wouldn't have been able to end any of them. But they've brought hundreds of billions of dollars pouring into the United States Treasury, helped curb inflation, and helped cut the federal budget deficit by a staggering 27%. And that's only for a short period of time. The number's much bigger than that when you add in the full year. And I've told people I got into a lot of trouble because of the fake news back there. I told people, I said, tariff is my favorite word. I said, my favorite word of every word is tariff. I've loved it for 40 years. I came here many years ago. Remember, they said I didn't come here. Then they found out I did. I got an award in Detroit, in Michigan, many years ago, and still have it. They said it never happened. It did happen. Turned out I didn't notice any apology. But all I did was talk about you're losing your car industry. This was long before I ran for politics. They said you're losing. I said, why are you allowing these foreign nations to take your car? You know, you lost 57% of your car industry. The good news is you're getting it back. But I said, why aren't you using tariffs? I've been very consistent, I will tell you that, for years and years. Even as a private businessman, for years I used to, because I get, for whatever reason, a lot of publicity always. I don't know if that's good or bad, but it happens. And I talk about the importance. But I said recently, I said, tariff is my favorite word in the whole dictionary. There's no word. And I took a lot of heat. They said, what about your wife, your children? What about religion and God? What about Jesus? So I said, all right, it's my 5th favorite word. And since then, I've been fine. They hit me hard, these people, the fake news. They were killing me over tariff. He likes tariff more than his wife, more than religion. He likes tariff more than anything. What a disgrace. So I now call it number 5, and I'm in good shape. That was a rough day. It's my favorite word, and I got killed. Every word, you know, when you go up here, you take a big chance, especially me, because I go off teleprompter about 80% of the time. But isn't it nice to have a president that can go off teleprompter? When you think? Remember the speeches Joe would make? First of all, they'd last a matter of seconds, you know. Thank you very much. You ever notice Joe would always cough before a speech? State of the Union, he gets, Ladies and gentlemen. And then it would be like very short. Although the one time they had him spruced up pretty good. Remember, he was high as a kite. He was floating. He was up there way up. He didn't. That was a bad speech. But hey, he got through it. You know, he got through it. If you call it getting through, this country was so. Can you imagine allowing 25 million people into our country? Many of them criminals, many of them murderers. What he did to this country, what they did, because it was the people surrounding that beautiful, resolute desk. But just as I promised you that I've imposed a 25% tariff on all foreign automobiles, I'm standing up for the American auto worker like no president has ever stood up before. You know, those tariffs are keeping the foreign auto workers. Now, if they want to come in and build the plant and hire you and hire your friends and your neighbors, that's great. I love that. Let China come in, let Japan come in. They are. And they'll be building plants, but they're using our labor. U.S. auto factories are now seeing more than $70 billion of new investment. Think of that. They were leaving. They were all going. They were going in the opposite direction. Now they're pouring back. It's the greatest. Nobody's ever seen anything like it. And much of that money is coming right here to the car-making capital of the world, Detroit. You lost, so many places. Since I took office, Ford has announced it will invest $5 billion across its Michigan and Kentucky plants, creating 4,000 new jobs. GM is moving production of the Chevy Blazer and Equinox from Mexico right back here to America. Right? Is my favorite auto worker here by any chance? You know who I'm talking about. What happens? Where's Brian? Brian. Oh, I see. He made some cash. He's out to Florida. Oh, he's been very disloyal to Detroit. We're going to have to. He is such a great guy, right? Man, that guy.
Well, there you have it. President Trump making comments at the Economic Club of Detroit. Welcome to Bloomberg Businessweek Daily. I'm Tim Stenovec with Bloomberg's Christina Ruffini. We're here in the Bloomberg Businessweek studio in New York. If you are interested in the remainder of the president's comments, you can check them out on LiveGo on the Bloomberg terminal. Christina, the president doing what he does and going a lot of places, but I think it's fair to say our audience most interested in his comments about tariffs. The president just now saying we should win the tariff Supreme Court case, though we'll figure something out if we don't win the tariff case.
Yeah, and also saying that the people who brought the case were inclined towards China. There were a couple of remarks about that. You know, it was the president's greatest hits. It was the usual. He clearly had prepared remarks, but as he does, strayed from them now and then. And we did get some more comments about the Fed. He said, quote, "We have a real stiff in the Fed." And then he went on a bit of a tear. We started complaining about the interest rates. We know this is a pet peeve of the president. He said essentially they raise interest rates to try to kill it, so you can never really have the kind of rally that you want. I want the markets to go up. He said we need to go back to sanity. And then he said again, you know, they kill every rally. You have a really good quarter. You have these great numbers, and they kill it with these inflation numbers and the interest rates. And he really, 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 really would like them to stop.
He would. I think it's fair to say what we've seen from happening from the Federal Reserve over the last couple of days and happening from Washington, D.C. Speaks to that. It's true that this is going to be pretty much the backdrop of our program today. We got a great program coming up in just a few minutes. We're going to be speaking with Chris Whalen. He's chairman of Whalen Global Advisors. We're going to get his take on what we're hearing from the president, not just with regard to his comments just now, but also with regard to the Federal Reserve. In addition to that, Matt Luzzetti of Deutsche Bank is going to be stopping by. He's chief U.S. economist and head of U.S. economic research at the bank. We're also going to be getting an update on Delta Airlines. Stock is lower today on the day. We're going to be hearing from Syth over at Raymond James on the quarterly earnings for Delta, the airline sector outlook. Delta's the first major airline to report, so everybody's always looking for it.
It's a bit of a bellwether for the economy.
Yeah.
And look, we also heard from the president about the economy as a whole, and this is something we're going to want to talk to our guests about as you stick with us through the hours here. But according to the president, growth is exploding, productivity is soaring, investment is soaring, inflation is defeated. I think that is the messaging you want to hear from the White House, the messaging the White House wants you to hear from them. But you got to talk to the experts and see if that really reflects reality. And the more and more they say it, it doesn't mean that the average consumer is still feeling it, even as we have those new numbers out today about inflation.
It takes on increased importance in an election year where the president is leaning all in when it comes to affordability. We know that's going to be his topic of choice at Davos next week. And we've seen it over the last week with him talking about oil prices coming down, talking about a credit card cap rate of 10%, credit card rate capped at 10%.
Making it harder or impossible for big corporations to buy single-family homes to drive down the price of housing.
Exactly. So that's sort of the theme of the year, and we'll see if his rhetoric matches what actually happens with that economic data.
The other problem this White House has going into the midterms, particularly, is it doesn't really matter for the average American what these big fancy graphs we have on the wall here say if they still can't afford eggs when they go to the grocery store. And just because inflation is slowing, those prices were already so high that unless they're coming down, which they're really not at the moment, that pain is still going to be felt. Gas prices are down, and that did help a little bit, but grocery prices are not down. And that's what's going to be really one of the biggest drivers of Americans when it comes to their pocketbook. And that's going to help them make decisions in the ballot box in November. And that's something I think it's become obvious the White House is acutely aware of and trying to address, even in the president's remarks today.
The president weighing in on oil prices, too, just in the last few minutes. The president saying we'll get oil prices down even further. Earlier in the afternoon, he did say he would love to see oil at $53 a barrel. Consumers might like to see oil at $53 a barrel, but oil companies don't want to see that. The hard part about falling oil prices means that companies will not spend the money to drill and explore for that oil if oil's not at a certain price.
Exactly. And we're going to talk a little bit later about how certain oil companies have said maybe they're not so interested in going to Venezuela, despite the president's encouragement there.
Well, I want to go now to Washington, D.C., where Joe Mathieu is standing by. He's the co-anchor of Bloomberg Balance of Power. Joe, I think Christina did a really nice job of describing this as partly the president's greatest hits, but we also heard about tariffs. We heard a little bit about oil. We heard about the Fed. What are your takeaways from his comments just now in Michigan?
Yeah, greatest hits indeed. Look, this is the third stop on the so-called affordability tour. He started in Pennsylvania. He made a stop in North Carolina, and now this is number 3 in Michigan, and it's not a mystery why he's picking these states. But he's also trying to work on a new greatest hits reel for Christina because he's got a State of the Union address that's less than 2 months away. It looks like it'll be the last week of February, and you're going to hear about a lot of these initiatives when he stands before a joint session of Congress. You can almost hear the speechwriter working when he does institutional buyers banned from the housing market, right? So we're going to squash defense contractors' ability to buy back stocks and give out dividends. Now we're going to cap credit card companies at 10%. You can just imagine the standing ovation for each one of these. The problem for many conservatives here in Washington is that these are pages right out of the progressive playbook. We had Senator Elizabeth Warren on with us last evening. She says Donald Trump called her to work together on some of these issues. These are actual proposals that she and Bernie Sanders have made in the past. And now we're hearing this populist approach creeping into the president's economic address. It'll be interesting to see if any of them stand a chance. But telling people that they're doing better than they feel was a problem for the last president, and it remains a challenge for this one.
That was a nice interview, Joe. And on that note, the president is doing just that. You know, we were joking again and again about the greatest hits. It's almost like the standards that he goes out and sing. But at some point, is the audience going to want or need some new tunes from this White House? Is there a way they can say this in a different way? Because this is how we've been hearing it for months, and it's unclear how it's landing with voters.
That's true. And he is still starting, I guess, every one of these speeches with Lee Greenwood. So I don't know. Maybe there is something about the soundtrack there, Christina. But he's got this CPI in his pocket today. And that's a pretty good story to tell for this president. Up less than expected, realizing inflation is not defeated, as he likes to say. He did talk about that in the address. That is, also confused in some cases by a lot of other ideas. And I think that becomes maybe part of the issue that you're pointing to. Every time the White House wants to get onto affordability, and we know that Susie Wiles, the chief of staff, has been really trying to push the president and the communications office in that direction, we start talking about Venezuela or Colombia or Cuba or Iran or maybe the Epstein files or whatever other story is in the air that day. And cutting through all of that noise has become a big challenge.
Well, Joe Mathieu, we're looking forward to hearing from you at 5 o'clock. I know you have a lot to do between now and then. Joe Mathieu, he's the co-host of Balance of Power. Tune in on Bloomberg TV and radio at 5 o'clock. I want to go now here to the Bloomberg Businessweek studio, and I want to bring in Chris Whalen. He's chairman of Whalen Global Advisors. He's co-founder of the Institutional Risk Analytics. He's co-author and author of many books, including Inflated Money, Debt, and the American Dream. And he also worked at the New York Fed in the 1980s. And that's exactly where I want to start, because we did just hear the president making comments in Michigan, ratcheting up his pressure on the Fed chief. He said, I want a Fed chief to put rates down on good news. When there's good news, the market should go up. When the market goes up, the Fed should lower rates. This comes after a weekend where I don't need to remind everybody about the pressure that the Fed chair is facing and what happened and what is happening with this Department of Justice probe. But as somebody who has experience in markets, who has experience at the Federal Reserve, what is the risk to markets here? What is the risk to the economy with the president jawboning like this?
I think the risk is obviously confidence. It also, I think even more importantly, risks calling the office of the presidency into ridicule, because when you say things that are clearly not well thought through, and when it's obvious that they're not getting the outcome that they say that they want, then you just sit back for a minute and say, what are you trying to do? I worked for Paul Volcker at the Fed of New York and then Jerry Corrigan. These were both very serious people who never said anything in public unless they had to. I think that Donald Trump has mishandled the Fed. The way to have dealt with this was to simply say, he hasn't done a good job. We're looking forward to getting a new chairman. That's it. And then let the man exit and retire. They could have also used the several aspects of policy, quantitative easing, the purchase of all those securities during COVID, obviously the refurbishment of the Fed's headquarters, which is rather grotesque. But you didn't have to do it this way. And by attacking Powell personally, continuously, I think they're not going to get what they want. I expect Powell to stay on the board until his term as governor is over in 2028.
Yeah, you're not the only person to share that with us in recent days. I think that's seen as a wide view. We'll see what happens. I hear you, and then I say, and yet, we're not seeing the equity market react, and we're not seeing, more importantly, the bond market react. It seems like the bond market is saying the independence is not threatened. Maybe it's Senator Tom Tillis, maybe it's Republicans coming out and saying, we're not going to let your Fed pick go through until this legal matter is resolved. Right. Is that what's happening here? Because it doesn't seem like the markets are taking the independence risk seriously.
The financial markets can get comfortable with just about anything. Would they be upset if rates fell? No. Would they be upset if you had other policy changes at the Fed that were more pro-growth, to the president's point just now? No, they would be very happy with that. They're not really concerned with the medium and long-term consequences, which is what I think you're really alluding to with your question, which is, will people take the United States seriously when it comes to economic policy? You don't hear anybody talking about the budget deficit. You don't hear anybody talking about any number of things. And the proposals that come out, capping credit cards at 10%, that doesn't work.
It needs an act of Congress.
The better customers in any portfolio like that subsidize the inferior customers, whether you're talking about housing or credit cards. So when you start going into these populist policy descriptions, which the president, seems to be more and more interested in, it just is a disconnect, because none of these things, I think, are really going to happen. The Congress is not going to pass a national cap on credit card rates. I don't think Fannie Mae and Freddie Mac are going to buy $200 billion worth of their own debt. They don't have the cash. Are they going to go out and borrow the cash? People forget that the GSEs have to hedge their books, so the net effect on rates is going to be just about zero. The Fed doesn't hedge. That's why they got such an immediate impact in March of 2020. So, when you look at the details, and obviously no one at the White House is looking at the details, these proposals don't have a lot of substance. And I think that's why the markets haven't reacted. We kind of shrug it off and say, They
just don't think it's going to happen? Is this like willful suspension of disbelief from the different markets?
I think so, because, if Jamie Dimon and the rest of the banking industry decided to fight credit card caps, I think they'd win. I also think that Trump is in perilous waters right now when it comes to his Fed appointment, because he may not be able to get a majority of the Senate to support him. Yeah. How would that look? I think Kevin Hassett may be done. We may see Kevin Warsh instead, which I didn't expect. I'm a big supporter of Warsh, but I didn't think he was in the running until about a month ago. So, this whole situation has a surreal quality to it. And I think the markets haven't reacted, in part because they can't believe it.
Yeah.
They haven't had time to process it. And they also, I think, discount it because it's not really well thought through. I think there were ways that they could have managed Powell, for example, that would have gotten the president what he wants. But instead, you're going to have a sole chairman appointed. You're going to have a more hawkish FOMC as we have now. And then you're going to have Chairman Powell sitting there as a governor for the next 2 years till the end of Trump's term. That's
Chris.
not what they wanted.
Yeah, I mean, a lot of folks out there saying right now that this specific attack over the last 48 hours has backfired. Really appreciate you joining us today and sticking around.
My
we
pleasure.
know the time was cut a little short due to President Trump. So that's Chris Whalen. He's chairman of Whalen Global Advisors, author of Inflated Money, Debt, and the American Dream, among other books, and editor of the Institutional Risk newsletter here in the Bloomberg Businessweek studio. The president still making comments. He says now that if I had the help of the Fed, housing costs would be easier. The president also praised that huge impact of $200 billion mortgage bond buy, which Chris Whalen just referred to. The president also saying, Christina, that credit card interest rates are too high.
Way too high. The interesting thing, well, there's a few interesting things about this president, obviously. One of the things I find interesting is he's very hard to dissuade from these issues. You know, we saw with the tariffs, this is something his policy advisors and folks around him were able to get him to back down on in the first term. And he carried that all the way through that 4-year hiatus. And then when he came back, he was there again. It will be interesting to see. The only person who was able to bend him a little bit was Jamie Dimon. When he went on the airwaves and said, this is a bad idea, all of a sudden.
He went on Fox Business that morning.
We had that 90-day pause, and we saw movement from the White House. So I am wondering, after Dimon's comments today about how Fed, you know, the impartiality of the Fed not being there could impact the viability of the U.S. financial system, I'm wondering if Trump heard that, if someone will play it for him, and if we will see any kind of impact on the White House.
The perfect segue for our next conversation. The president criticizing Fed Chair Jay Powell after a Justice Department probe into the Fed's headquarters renovation sparked backlash across Washington. The president telling reporters outside the White House this morning, here's what he had to say.
He's billions of dollars over budget, so he either is incompetent or he's crooked. I don't know what he is, but he doesn't do a very good job.
That's President Trump outside the White House earlier this morning. Meantime, underlying U.S. inflation rising in December by less than expected. We've got a lot to get to with Mathieu Luzzetti. He's chief U.S. economist and head of U.S. economic research at Deutsche Bank. Thanks, too, for sticking by. I mean,
of course,
we were set to talk to you a few minutes ago, and the president started on time today.
More important things cropped up. It's okay.
Well, we're not going to judge what's more important.
We had also planned for the president to be late. We honestly had not planned for the president to be on time. So thank you for hanging out. We appreciate it.
So you call this DOJ probe of the Fed a, quote, unprecedented challenge to Fed independence. How, in your view, is this different from pressure that other presidents have applied? LBJ, for example, or President Nixon?
Yeah, look, I think there really is a long history here where presidents have applied pressure to the Fed through various measures. I think in that note I had talked about the historical experience where LBJ and William and Chesney Martin had this kind of dust up around in the 1960s to try to bring rates lower. Obviously, President Trump has pushed for the Fed to cut rates aggressively in recent times. But taking legal action here is the unprecedented aspect of what's happening. I was listening into the conversation that we were all just having. I think initially you did see the bond market respond yesterday.
Yeah.
You saw 10-year yields rising 5 to 6 basis points. The longer end of the curve was moving as well. I just think it was a really important development that Senator Tom Tillis, other Republican senators came out and basically said, look, we are going to block any Fed appointees until this gets resolved. And so I think that opened up potential counterproductive actions here, whether it's the Chair Powell that's staying on or that you won't get more dovish members on the Fed.
And that margin is so thin. I mean, it's the caucus has been together enough that they've been able to uphold the administration's policies. But, when you start getting calls from those donors, from your own portfolio managers saying this is going to have an impact, I think that does move people. Obviously, Tillis is retiring, so he has he's in a swing district, but he's able to go out on this ledge because he doesn't have to run again. But I'm wondering why you think this president is so obsessed with this, especially given recent precedents. I just every time think of Turkey and what happened there. They fired the guy who did the numbers because Erdogan didn't like the numbers. They raised interest rates and then the Turkish lira collapsed. Has no one in this administration, are they not concerned about that?
Yeah, so I think I would think of this through the lens of affordability. It is the number one question for U.S. households. I think it's what's driving elections and kind of political decisions. And I think everything that you see coming out of this administration is focused on that question at this point in time. I think key to affordability in the housing market is viewed interest rates. Now, I think the disconnect is that if the Fed cuts rates aggressively, it does not necessarily mean that the long end of the curve is going to come down as well. It doesn't mean that mortgage rates are going to come down as well. In fact, every time that we've seen an attack on the Fed, including yesterday, the long end rates typically rise, mortgage rates rise. And I think that's where it becomes kind of counterproductive for the administration.
Matt, you got to run. We appreciate you taking the time and joining us on Bloomberg Businessweek today.
Thank you so much.
Do you want to head to Charlie Pellet? He's standing by in the Bloomberg Businessweek studio. He's watching markets closely as we're over an hour to close of equity trading. Hey, Charlie.
Well, hello there, Tim. And we are looking at a roughly 400-point drop right now in the Dow Jones Industrial Average. A lot of red. Dow, S&P, NASDAQ all declining. Interestingly, though, the Russell 2000 index of small cap shares holding on to a gain briefly, barely of 0.1%. We got the S&P at 69.52, retreating from a record, down 0.3%, down 24 points. The Dow down 395, down 0.8%. The NASDAQ Composite Index down 73, NASDAQ lower by 0.3%. The 10-year currently yielding 4.16%, the 2-year 3.51%. Spot gold down $3 the ounce, little changed at 45.93. Silver, though, what a story there, now at 87.39 the ounce. Silver surging 2.7%. West Texas Intermediate crude up 2.7%, 61.09 a barrel on WTI. And Bitcoin, meanwhile, above 94,000, just above it, up by 3.3%. Elon Musk's SpaceX now offering free Starlight satellite service in Iran amid deadly protest and a days-long internet blackout. Earnings from Delta this morning. Delta shares down 2.5%. It provided a profit forecast that did fall short of Wall Street estimates. Other airline stocks also declining after Delta's report. American Airlines, AAL on the ticker, down 3.8%. UAL, United Airlines Holdings, down now by 1%. JP Morgan Chase, after earnings, down by 4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie Pellet. You just saw on the screen there, and you heard Charlie, Delta Airlines down about 2.5%. Airlines under pressure, including Delta. Delta fell as much as 4% earlier in the session. The company providing a profit forecast. It fell short of Wall Street estimates. Delta's taking a more cautious view for this year after the aviation industry emerged from a volatile year. I want to bring in Syth, Managing Director for Airlines and Advanced Air Mobility with Raymond James. Savi joins us from St. Petersburg, Florida. Welcome. Delta is the first major airline to report. Investors often look to it as a bellwether for how the industry is doing. The report contrasts quite a bit with what we heard from Ed Bastian, the CEO of Delta, last year at this time. And certainly a lot has happened when it comes to trade policy, when it comes to immigration in the U.S. How would you characterize Delta's outlook for this year?
Hi, Tim. Thanks for having me. No, I think if you look at the momentum in terms of demand, corporate strength, that's sounding a lot like what we had last year at this time. In fact, you're seeing strong year-over-year growth on top of a very strong setup last year to come into the year. What's different is, I think, a little bit more of a recognition that there's a lot of policy volatility and anything can happen. So maybe a very cautious start in trying to forecast a full 12 months based on just what we're seeing so far in the year. So I would say overall revenue trends very strong, but maybe lessons learned and being a little bit more cautious on a full year outlook.
I also want to ask you, the Delta CEO said that demand from high-spending consumers continues to be strong, and that's something we've seen in a lot of the hospitality industry. He added, effectively, none of our growth in seats will be in the main cabin. They virtually all will be in the premium sector. Are airlines still losing money from economy passengers, people like me who are cheap and in the back of the plane? And at some point, are they going to run out of folks who can pay a premium for a better seat? What's the model here and what's going to work?
Hey, Christina, it's really, there's a lot of kind of revenue management here and premium passengers are flying, but the very price-sensitive passengers are still not. There's probably too much supply in that market, and the fares are weak. And the interesting thing for the group is you are seeing capacity in that part of the market getting rationalized slowly. And so there's an opportunity here for another leg up as we get that market stabilized. But you are correct that the strength still is on the premium side, with the main cabin fare environment not as strong as premium.
Savi, I want to go to some comments that Delta's CEO Ed Bastian made on this morning's conference call. This is about the credit cards and the news that we got late last week from the president calling for a cap on credit card rates. Check out what he had to say.
One of the big issues and challenges with the potential order is the fact that it would actually restrict the lower end consumer from having access to any credit, not just what the interest rate they're paying, which would upend the whole credit card industries.
That was Delta CEO Ed Bastian on this morning's conference call with analysts. So a couple different things I want to talk to you about here is one, Delta, when you think of credit cards and airlines, Delta is the airline with the credit card. Help us understand the contribution that Delta's credit card has to top line to bottom line. What do we need to know?
Yeah, I mean, credit cards is really important, has become important for the airlines as a whole, and not just for Delta. It's most powerful for the big four, so the airlines with the kind of the biggest networks here. But even some of the the smaller airlines like Allegiant, JetBlue, the decisions are being made based on how much credit card contribution and what routes might appeal to credit cards. So it's really important. In the past we've said at least 3 points of margin are coming from the credit card, probably more. And it's also important in terms of cash flow. It's a steady stream of cash flow. So when you do have demand volatility where suddenly some shock happens and people may not want to fly, you're still making charges on your credit card. So for airlines, it's also a nice stream of steadier revenue that comes through in volatile kind of passenger travel demand environment. So it is an important component for airlines and something we're watching closely.
Yeah, so it's interesting because he was talking about two different things there. One, he's talking about, which we've heard from a lot of the banks of late, which is access to credit and why it's important to have these products to extend credit to a large portion of the American population. If this were to go into effect, and there are a lot of skeptics out there, a lot of people saying this would never happen, but what would be more at risk for Delta? Would it be the actual passengers who would not be able to afford to travel and have this discretionary spend as a result of these caps? Or would it be that Delta wouldn't be able to make as much money with their credit product?
Given Delta's more premium and kind of higher end focus, I think for Delta, it might be a little bit more on just fewer people having this card. Because when you do get a card, you're more likely to spend with that airline. You're less likely to shop around because you do get benefits. So that's the aspect of it. And I would say this is probably going to be a lot more. To Ed Bastian's point, it's going to be a lot more impactful, probably for the smaller airlines and for airlines that rely on a lot more price-sensitive passengers that need that credit to make those trips.
Well, and speaking of those smaller airlines, we also wanted to ask you about, in other aviation news this week, on Sunday, Allegiant announced that it's buying Sun Country Airlines for $1.5 billion. They are kind of the other end of this market we were just talking about. They focus on lower income, middle income folks. They have a lot of small and medium markets, although this merger will allow them to reach more places. What are your thoughts on that merger? And is that what we're seeing in a lot of other industries, the hollowing out kind of the middle where you're getting higher end and budget making a profit, but everything else in the middle is really struggling?
Yeah, Allegiant's really interesting, Christina, in the sense that this is an airline that focuses on, serving small markets to direct leisure. So Allegiant's definitely a lot more leisure and doesn't carry the corporate passenger that you might get on one of the big four airlines, but they still cater to a higher income net worth individual because they do fly folks to their second homes and things like that. So they span the spectrum, and what I would say is I think what's happening here is airlines need it's like any network. The bigger you are, there are scale benefits, and I think that's what the smaller airlines are figuring out is they need to get bigger. The bigger you are, the more benefits there are to loyalty, to corporate credit cards and things like that. And so it's trying to get bigger and trying to get scale so they can compete with the big four. I think that's what you're seeing, and we think we'll see a lot more of that.
Yeah, talk a little bit about that. That was my next question, is what other M&A do you think we're going to be seeing this year when it comes from, especially the smaller airlines? I mean, no question, I would imagine JetBlue, Spirit, Frontier are going to be trying to do some shopping.
Yeah, there's definitely, I mean, there's probably something more imminent with Spirit. We know that given their kind of cash flow perspective and needing creditors to put more money in. So we'll get an answer there, you know, if it's a matter of that they, you know, have to do a Chapter 7 scenario or they merge with like a Frontier. But you do see that kind of lower end or the smaller end of the market really needing to kind of consolidate and get bigger so that they're stronger to kind of compete with. JetBlue, they have a lot of cash, but they also have a lot of debt. So we'll see what happens with them. They have a strong standalone plan that they're executing, and it will all depend on, you know, if we get a stable demand environment and if we can see some earnings and balance sheets improve here in 2026.
The thing, I mean, this might be a stupid question, but the thing that struck me about this is it wasn't necessarily a bad Q4 report. It just wasn't as good as it could have been. I'm wondering if at the moment, given all the constraints on the industry, given how expensive it is to operate these planes, to fly these days, is status quo, is maintaining altitude kind of as good as it's getting right now for a lot of these big airlines?
I think if you look at the fourth quarter, I mean, there was a lot of noise. It clearly got impacted by the government shutdown, and more so from the DOT directed flight cuts. And then you did have, weather towards the end of the year as well that hurt things. But fourth quarter, actually, Delta came in above expectations. So it was a good hit. And then what I would say is, if you look at the revenue, as I mentioned earlier, the demand momentum, the revenue momentum is really strong. We thought we had really tough comps because of the kind of the post-election euphoria that we saw in the prior year. But they're showing revenue growth on top of that. They're showing fare growth on top of that. So it is a really strong setup. I think what disappointed is investors were anticipating a strong setup and they were expecting a really strong guide. And I think Delta is being cautious here and saying, look, there's a lot of the year to go. We're still 2 weeks in. So let's be a little bit more cautious in setting expectations so that we don't have to cut guidance like we did last year.
We're going to do one more. I got one more question for you, and then we have to wrap. Savi, I want to ask about moving forward to like United Airlines, American Airlines, and what Delta can tell us about what to expect from those other companies set to report soon.
Yeah, I think we'll get quite a few. I think that generally what the read-through here is the revenue environment and outlook is going to be positive. I think United has historically, talked about putting a few acts of God into their outlook. I think you'll get some conservatism in the outlook from the onset there. But generally, I think you're going to hear something similar from a revenue perspective, that there's kind of good momentum to begin the year with. And kind of, especially what we're seeing from the industry is good capacity discipline. And that's what we'll watch from United and American as well, is what are their capacity growth plans? Because Delta's 3% is very encouraging. And so what those airlines say about capacity growth will be also important to at least understand that supply is not going to be the issue this year.
Savi Syth, thanks so much for joining us. Managing Director for Airlines and Advanced Air Mobility at Raymond James, joining us from St. Petersburg, Florida. In the meantime, President Trump, he's still making comments at the Economic Club of Detroit, and we're seeing a red headline across the Bloomberg terminal.
Yep, seeing some things across the terminal. Trump threatens to end sanctuary city payments on February 1st. We talked about he was hitting a lot of the things we hear him hit in his speeches. This is another one of his. He does not like what he calls these sanctuary cities. Given everything we've seen, the conflicts we've seen in Minneapolis and the reaction from some Democratic leaders there and in some other states, I'm sure this is something that he wants to show strength on, and the White House is pushing back. And he says they're going to end federal payments to sanctuary cities on February 1st. Now, as with many of these policies, can he do it? Will he be able to do it? Will it likely end up in litigation in court? Yes. But this flood the zone approach makes it very difficult to stop these things before they go into effect, or at least make the lives difficult of the people who have antagonized the president. So.
Some other headlines crossing on that affordability narrative. The president says later this week he will announce a healthcare framework, and that healthcare framework will address affordability. He also said that favored nation drug pricing alone should win me midterms. We know affordability is his focus for the midterm elections. He says the health plan will reduce premiums and will start hitting drug runners by land. That headline coming a little later. He's talking about, he said we took out 2 drug-carrying submarines. The president's still making comments. We'll bring you more comments and more headlines as he does continue to speak at the Economic Club of Detroit. In the meantime, taking a look at markets, the S&P 500 off its worst levels of the day, off its best levels of the day, down about 0.4%. The Dow Jones Industrial Average down about 0.8%. The NASDAQ Composite down 0.3%.